Good morning. Welcome Beyond the SEAF Model. I'm Jack Kosar. This is effective for the week of June 22nd, 2026. Let's get started. SEAF signals for this week. Technology returns top to the top. We get a little bit of a boost from industrials, and we hang on to materials. Overall, seeing some lower ends of scores, which kind of highlights a little bit more concentration, a little bit more focus in that top three that we really haven't been seeing as much. Seeing some strong outflows on the bottom half, with biggest coming out of energy, which is now showing 11s across the board. So overall, pretty weak there for energy. And again, like I said, technology coming in relatively strong. Saw some really good flows. So highlighting this on the heat map, technology at 2.41% increase on the trading week. That is a giant flow back in. I will highlight in just a second. Actually, let's pull it up now. So technology's rainbow chart, as you can see here, we started to back off a little bit of underperformance relative to the S&P 500 on this side of the chart. But again, really seeing that strong money come back in, shot us back up to the top mark. And we've seen this nice run up in the relative outperformance versus SPY over this last week. So big influx of money. That influx of money is consistent with what we were seeing. I'm kind of bouncing around here, but let's track in the narrative instead of the graph today. So with that big inflow of money, as you can see here, we briefly dropped below that 21-day moving average. This is the sector AUM for the total all 11 sector spiders up top, and this is just the SPY chart on the bottom here. But as you can see here, money after that, a little brief interlude, money has been flowing in aggressively, hitting all-time highs at above 390 billion under management. Last week, kind of heading back into our heat map, last week we saw 3 or 4 up days for 2.71% of assets flowing into the 11 sector spiders. So that's what we just saw on that chart. Really seeing some strength here, again, mainly led by technology, though industrials, while muted green here, was 0.28, which would be a pretty good score in any other week. But again, with 2.41% increase just in technology alone, it kind of mutes this particular color. Outflows, though, really seeing some strong outflows here, 8 through 11 on the week. 11 at negative 0.93%, almost negative 1% outflow for energy. That's relatively significant and really starting to build some negative accumulation over 3 time periods for energy. Healthcare at 10, negative 0.69%, so pretty decent strong outflow out of healthcare. Same thing with staples and communication services. Seeing strong outflows on the staples and healthcare, kind of highlight, this risk-on skew that we're starting to really start to see again with technology taking the lead there. So highlighting now, just heading into our rainbow charts, seeing materials. Materials has been a relatively decent run for us in terms of sticking in this middle to upper favored. Seeing some nice relative outperformance. Nothing super strong like we had seen really in the beginning of this year, but nice positive trend here for relative performance. So relatively good place to be here for SEAF. Industrials really saw some nice strong flows coming in on that trading week, building that accumulation over 3 time periods now, starting to grow again in a relative basis to technology, not as strong, but definitely still showing some strength overall for industrials. Heading into that mid-favored here, have some nice run-up in that relative performance versus SPY, which had a little bit of support coming back from December of last year. As I mentioned, technology, we'll just briefly go over it. We had that really nice strong run-up, really strong flows. A little bit of a brief break here as we saw it kind of drop out of that top 3 for a second, and now right back into the swing of things with ones across the board, showing nice strong strength, and that relative performance is starting to rebound after it had that small correction. Energy, just wanted to highlight currently as low as you can go, 33 overall score, which is 11s across the board. Starting to make relative lows in the relative underperformance versus SPY, stuff that we haven't really seen since February of this year. So on the downtrend, really have kind of broken that positive uptrend that we saw in the relative performance for energy, as money has completely just evaporated and is running out of there. Last, but not actually least, but the last one we're going to go over today, healthcare had kind of spiked up there, showing when the market was starting to show a little bit of weakness here prior to the all clear from the Middle East from our friends in Washington. As the money has now flown out of healthcare, a little bit less of a defensive posture is kind of what I'm trying to highlight here. Money coming out relatively aggressively of healthcare, seeing that relative underperformance start to turn around as we have left favored, crossed through neutral, or now into a void for healthcare. That is all I have for this week. I look forward to breaking down the CPR with you all next week, and thank you.